Let me now bring on board Sangeeta Purushottam, Managing Director with Nine River Capital. Sangeeta, good morning. Thank you for joining us. Do you think the budget hangover is over, or that will continue to bother us for another 3-4 days more?
No, I think it's more or less done with, and the road ahead is fairly clear in terms of what the government's likely to do or not likely to do. Some specifics will play out, for example, when and the extent of a fuel price hike, or if something happens on fertilizer. So I think those details really need to come through. But I'd say bulk of it is over, and I think it's back to life as usual.
So Sangeeta, what do you think was causing the weakness in the market? Was it just concern or surprise in the fiscal deficit number? Because liquidity has been pretty much intact. FIIs have been buying on a daily basis.
Yeah. I think that, there has been some disappointment because, some of us were hoping, although the expectations were low, that there would be a clear-cut or a more decisive route to fiscal consolidation, and some of the issues that have been plaguing the economy and markets would be addressed more decisively. So I think there's an element of that. And to some extent, there's also been some level of profit-taking given the kind of rally that we've seen. From here on, I would say that, the key factor really is going to be how liquidity pans out. I don't see a case for the markets to really rise in terms of PE too much above the averages given what's happening in the economy. We're in for a slowish, incremental kind of recovery. And I think the key element is going to be more the technical factors, the level of liquidity coming in. And if that continues, at some point, it will also spur domestic liquidity to come in. So I think that's really the key thing to be watched out for.
Tata Motors on Tuesday corrected. Tata Motors DVR also corrected by about 5% plus. Now Chrysler, the company which owns Mercedes, they've slashed their retail prices in China by about 30% plus. Since JLR, Jaguar Land Rover, they get about 25% of the total revenue from China. If Chinese luxury car market is slowing down, that for sure will have an impact on JLR's profitability. Do you think in the near term, Sangeeta, Tata Motors is more like a sell and avoid because the stock already has seen some amount of run-up, and as Chrysler has cut prices in China, JLR will be falling soon?
Yeah, I think either JLR follows soon or it takes an impact on its volume. So, you're going to have either of the two consequences. So I think that some softness would continue till this gets priced in.
Sangeeta, when we started the year, the popular trade on the street was sell consumption, buy rate sensitives. But if I look at the price action and volume action in a Titan, in a Bata, in a TTK Prestige, consumption stocks are still roaring.
Yeah. I think, when we started the year, the valuations in many of the rate sensitives were indeed very low. So, if you look at it from that point in time, there has been a fairly sharp rally in many of these stocks on the back of fairly low valuations. So, we've seen, for example, an SBI as low as below 1800, and many of the infra names have, after correcting also, are still up about 50% year to date. At this point in time, I think the reason why we're seeing some action back in consumption is that there isn't a great deal of clarity either on the extent to which interest rates will correct or, the revival of the momentum in the broader economy. And given that and the fact that, you did get a good trade on the rate sensitives, it's actually natural for the market to move back a little bit into the defensive till some clarity emerges. And I think the next key event is really going to be when we do see a rate cut happening and the extent of the rate cut, and that could carry an element of surprise.
So if we get a rate cut in the next credit policy, which is in the month of April, do you think after the rate cut, the Nifty will cross 6,000?
No, I'm not sure about that, but I think the banks could have a case to rally then.
Okay, the other trigger for the market also could be crude, and with escalating tensions, say in the Middle East, that is something that you would want to watch out for. Crude now, again about almost 0.6%. There 106 plus levels is where the NYMEX is, and the Brent already nudging that $125 per barrel mark. And Sangeeta, really, I mean, for a market like ours, that could be the biggest fear, right?
Well, yes, at this moment, I think crude does make a difference given where we are in terms of the fiscal deficit and the issues that it raises, with respect to the rest of the economy. Over a longer period of time, if you see, there's actually been, interestingly enough, a positive correlation between the market and crude prices. So we've had periods where markets have continued to grow despite crude rising, but I think the question is that once crude reaches a certain level where it really starts to hurt, that's where the negative impact comes in. And I think we are close to those levels now because of the linkages with the fisc, with interest rates, and the entire macro piece.
Sangeeta, even though in last 2 or 3 days foreign institutional investors have not pumped in more, do you think the broader setup for liquidity is still intact?
It would seem so. I mean, there's nothing really just now to suggest that setup is changing. So I think it would probably continue for some more time.
What are your thoughts on a stock like Titan? When I say Titan, the entire consumption space. These stocks are expensive, but the price action in some of these stocks is suggesting something else.
Yeah, I think firstly, as a theme, the consumption theme remains valid. There is some slowdown, no doubt, and that's evident in many of the consumer durable companies. So there you see it more starkly because that's really the nature of the industry. Having said that, as a long-term theme, that theme remains valid. And at a time like this, where it's really hard to bet on anything which is very economy specific, unless you do it on the basis of valuations and you take a 3-4 year call and say that, okay, over a certain period, these valuations will give you returns, there's a tendency in the markets to go back to the known themes where earnings visibility is reasonably high. And my sense is that that's really what we're seeing now happening in the consumption space. So it's, back to a defensive kind of a play.
Sangeeta, closing comments from you. Where are you ready to allocate disproportionate amount of money in your personal portfolio?
Well, I think, in the near term, let's say till we have clarity on what's happening to interest rates, I would go for small or mid-cap consumer stocks. There's still value there. That theme is to be played out. You don't have valuations as rich as what you see in the larger pack. So I think that's a good place to be. Define small, consumer durable for us. Not durable. I just said consumer stocks. So it could be companies like, which are a play on niche. So the second or the third rung of consumer companies. And there are a few of them. Which ones? Because I'm trying to guess. I cannot think of any names. Okay. So I think, there are companies, for example, in, let's say, the ceramic pack, and I need to make a disclosure that I own some of them in my personal portfolio. Then, companies in the consumer non-durable side, sub 1,500 market cap, you do find them. So there are some companies there.